Hey, welcome everybody. Happy Monday to all. This is Carlos, CEO of GAR Capital. I'm with my Chief Investment Officer, Anthony Acosta, on the line. What's going on, brother?
Good evening, everyone. Good evening, Carlos. Glad to be here. Just another day in the markets and ready to give it to you. Let's go. Let's do it.
Let's do it. All right, we're gonna talk markets today. Yesterday was our forex talk. We're gonna do that every Sunday, and I think Mondays from now on should be our stock talk. Right? Everyone sees how we're doing in options and stocks and talking commodities. Well, this video is for everybody, for the public, on our YouTube channel at GAR Capital. We have a special video blog that I do on our website only for our members. So again, any kind of specifics in regards to signals or any kind of consulting work we do on there. But this is going to be just a broad analysis, and we're going to talk markets just together. We're going to go over and everything. And if you have any questions in the future, make sure to check us out on our website at garcapitalfx.com, or make sure to email us, jarcapital@gmail.com. So with that being said, Anthony, Monday, the tech bloodbath continues, my friend.
It continues a second day.
Second day, man. Wait, worst 2 day sell-off in NASDAQ since December, as everyone saw in the afternoon note. I mean, FANG, everyone, the darling of the stock market, Facebook, Alphabet, Amazon, Netflix, the G would be Google, A would be Amazon. I mean, how much has that accounted in the NASDAQ fall? I mean, is this, in your opinion, an index fall or is it a specific stock fall?
I think it's just take profiting in tech. I mean, tech has led the rally the whole year. Based just off the rally alone. I mean, what, 33% on Apple, 28% Facebook, I think. I mean, just based on the rally alone, I think it's just take profiting, and then of course algorithms take over,
Oh yeah,
snowball effect. So that's basically where we're at now. I don't think it's gonna. Yeah, it just depends on the technical levels too. On the Nasdaq, I mean, if we break down, we could see 5,400. Now that
hmm
is a possibility, but based off of today, especially in the options market, calls were basically won over the puts. So I think with
right.
with another day, if we have some more heavy volume on the call side, I think we could make a push up, and this would be by the dip. Remember, going back, the whole year, this whole rally pretty much is always by the dip. Now we have to wait and see if this is that dip.
Definitely, this bull run has been very resilient. No matter what happened in regards to election, since the election cycle in November, whether it's UK elections, ECB, Fed talk, I mean, anything, even bad NFPs, non farm payrolls, this market has been resilient. What has led the
Exactly.
way has been tech and materials. I mean, and transports. Those three have been the darlings while we've seen biotech get hit. We've seen energy take a hit with oil. I mean, little slowly but surely, the banks earlier in the year, banks were on fire. Goldman, since their bad quarter last time was the trading volume and their trading profits were kind of messed up and missed. Morgan Stanley, Bank of America, Citigroup has hit all time highs, or not all time highs, excuse me, pre 2007 recession highs, global crisis.
Yes.
And then we also had JP Morgan with their great balance sheet take a little bit of a hit. But I mean, the tech has led this rally. So we've seen how we've been speaking about the big boys, the Apples, the Googles of the world. But the chip makers have been the leaders. They have been the bellwethers. Your AMDs, your Nvidias, which we actually missed the boat on Nvidia. But
Oh yeah.
Micron, those three, the three-headed monster of the chips, have had massive gains. I mean, are we surprised that take profits are going to happen? I mean, maybe people are just too young to understand that the stock market does go down sometimes. Would you agree?
Exactly. Yeah. I
I,
mean,
I think that's
this
one
is
thing that
this
people
is
don't
minor.
understand yet. It goes up forever. I mean, anyone who bought Bitcoin, you saw today, fell 14%. Nothing lasts forever, kids.
Yeah, that's what it breaks down to. And with these, chip stocks and the tech stocks, they go up 1%, maybe 2% on a good day, and just within 2 days it drops 8%. That's why everybody's blown out of character. But I mean,
Right.
it's very minor compared to what we've accomplished in the Nasdaq.
Well, we've
So
s- we've seen how Nvidia has hit up 4% days almost on the regular. Like we will see 4% moves on Nvidia with like a 1% pre-market or a 1% post-market move, and to us is like the norm. It's moving
Yeah.
around like an aggressive biotech that just got an approval from the FDA. But yet Nvidia, with their cash flow, fundamentally to me is sound. I love it fundamentally. I think with everything coming out with the autonomous vehicles, we saw how the new Xbox came out on E3. Anyone who's a chip investor or trader needs to be paying attention to the E3 conference with the PlayStations, Nintendos of the world. I believe AMD makes the chips for Xbox, but if we've known the proxy that where Nvidia goes, AMD's right behind it. Remember, this
Yeah,
was what, a
exactly.
$2 stock,
True.
a $3 stock just last year, and now it's trading what, $12? Let's pull up that
Yeah.
quote. I mean, I'll go and pull up here a 4 hour chart, 180 days, and I mean, excuse me, let me give you a daily for a year, and you could just see here how it's went from a $4.50 stock to 15.55 in the highs.
Look at that.
I mean, it's just been explosive growth. Um, in your opinion, with AMD, if I had to say, and I was going to ask you, Anthony, between the three chip makers, the Microns, the AMDs, and the Nvidias, if you had to rank them, if someone who wanted to get into the chip world or the chip investing side, how would you rank those three companies personally?
Not so much ranking. I would go with Micron first. I believe just and because I'm a technical trader, just off the technicals, I think that Micron has more upside potential than the others. So that's the one I would roll with. I mean, if you look at the weekly chart and you go way back to the actual tech bubble, everyone's referring to this as a tech bubble,
Yeah,
but the tech
now
bubble in 2000, not that. I mean, we have once we break out from this level 35 here, I mean, we have a lot to go, and I believe that will happen. I mean, I do believe tech is the way to go now. Regardless of anything, tech is the
right.
way to go.
Well, how
I
about
choose Micron in any of those.
2015 was the high of the well, let me see if I can bring this back a little more. Let me see. Oh, that's a monthly chart. Let me see if I can get a yearly chart on the Micron. I think I have to get a time
Gotta
frame.
love Micron.
Yeah, I already have Micron here, 36.59. Let me see if I can remove a 10-year. Move. Let me delete this. Yeah, 10. Oops. Did I add a 10-year already? I think that's the highest I can go. So let me see if I can bring it up here for everybody so they could see what you're talking about here on TradingView.
Oh, there you go.
We do love our TradingView, that's for sure. Let's go ahead
Yeah,
and
for
bring
some
up a
reason I
monthly
ended up
chart.
going.
Okay,
There you go.
94.63 at the tech bubble in 2000, right? We're at 31.20. Looking at what we're looking at, if you're a long-term trader, I mean, you see, okay, maybe a 36 here would be
Yeah,
resistance.
resistance. Yeah,
Right.
exactly. But
Yeah,
that's
36.
about it. I mean,
That's about it. Unless we can break those levels. I mean, fundamentally, Micron is solid. Again, I love the three chip makers. If I'm going to rank, and
exactly.
I'm gonna go against you here, I'm going to go NVIDIA. I know, we missed the boat on that. I just think NVIDIA has more of the backing with Wall Street. We've seen SoftBank pick up shares and pick up an actual position in NVIDIA. I like the backing from Wall Street. Micron has had better quarters and better sales. AMD would be third. I'm not disliking AMD. The calls are very, very cheap. But if you look into a longer term, higher upside, I like NVIDIA personally. Micron would be my
Yeah, pull up
second.
the chart.
It's like,
Pull up the
well,
chart. Check it out.
all right, for what, NVIDIA?
Yeah, in a bit.
Okay, NVIDIA here. Oh, I mean, look at the explosion. Look at the explosion. I mean, we hit the
Check
actual
the
high
daily.
was 168.20.
Yeah, check that out. I mean, it's had a nice pullback with this tech sell-off. Real
Right,
nice pullback,
right.
actually.
Yeah, we're looking here at a
Check
1 hour.
daily. Check the daily.
Let's go and check
The
that daily.
bigger time frame. Been waiting for a pullback. I mean, this has just been on fire from 100 straight to 170 in what 3 weeks.
Right. Now, again, this was the earnings call back in February, and we had a little bit of a consolidation, kind of a range, and then we had the breakout. And right in May is when we had the SoftBank announcement and the hedge funds positioning into NVIDIA. And if you got in there,
Yeah,
you're happy. Even at this pullback, all you lost is profits. So again,
exactly.
if anyone told you, if you had an advisor worth a damn, they would have told you, take a quarter position off the table, get the cash, run. I mean, algorithms. Uh, Now with everybody getting into funds, index funds. I mean, individual stocks are hard to come by, of course, But again, I can see where advisors, algorithms, hedge funds are scaling back positions on tech. Trying to find their maybe not to have the whole table of the four big chip makers. Maybe just pick and
Yeah,
choose a
exactly.
couple. But what is telling about this drop to me is that it's a index drop. It's not a specific stock. If it was U.S. Steel a month ago with the issue when X dropped down, I'm going to show you that chart.
Yeah, it was
This is in the
insane.
daily. That was a 22% drop. Okay, and that was just one steel company. When you have a biotech that misses an FDA approval or doesn't get a drug approved or what have you, that's an individual stock. But this is index. I mean, we can compare the QQQ with the Nasdaq index, and you could see the rise in tech. Again, it is weighted with Amazon, Facebook, and Apple, and what have you. But what's telling to me is that this drop isn't as significant as a panic drop as you would see a 20% drop or a correction. Not even a correction, in my opinion. We're far away from a correction. All we've done is lost profits, if anything. And
Yeah,
I mean, personally, the dip buying, even today, with the bulls were validated by the dip buying. If we look here at a 15-minute chart for the day, I mean, right here, we ended up here on the QQQ right around after 12 noon. We already kind of hit that bottom. So,
yeah. I mean, you have Friday algorithm-driven sell-off, snowball effect. Everybody
right,
throws in the towel, and it's Friday. You got Monday morning, everybody panics a little bit, so there's more of a sell-off at the open. But
right.
then throughout the day, you see the volume pick up and the calls and the options, and people buying the bids get there. And here we are, back ever since. I mean, we get above. This is QQQ. We get above 139.50, and we're on a roll. I mean, look at that drop. That's a big drop, especially in the QQQ.
Absolutely,
So
yeah.
I think risk reward definitely is for the upside. And at this point, you should be looking to go long or going long with half position. Maybe with another drop, add more. But I mean, you have to give it a shot. And tech is the way to go. And with this sell off, you have to poke at it.
All right, Anthony, your microphone's cutting in and out, so I'm going to give you a second to check that out while I go ahead for the viewers, and I'm going to give a quick update on what we're looking at. This is the FANGs, well, other than AMD. I think I have Amazon up, Netflix, bring that up here, and then I believe we had Google up here. And you could just see here on a 15-minute chart, 5-day, you could just see how the move down is across the board. But fundamentally, these are great stocks. I mean, if I had to rank these four again, if everyone wants to see the rankings personally, Apple to me, if you're looking for stability, a little more stability, of course, Apple, because it's so weighted in the Dow and the NASDAQ. Uh, but in general, I like Amazon the most. I think fundamentally, Amazon has a lot more room to grow. They just had a price target upgrade. We talked about it on Twitter. I think the price target upgrade was 1,600. It's at 963 now. Great discount to get in. Personally, I mean, most people who have mutual funds should own Amazon. Google as well has been trading kind of the proxy right then and there, only $20 off the price, $22 off the stock price currently. And I like Amazon the most. I like Apple second, well, Google second, Apple third, and Netflix would be fourth. As of these four FANG companies, we're just missing Facebook, so I'll bring that up. Facebook would be my second favorite pick, actually. Now I would say Amazon, Facebook, Google, Apple in that order. We had a high of 155.59. This is still a 15-minute chart of the past 5 days. You see the spike in volume on Monday. Definitely had a little bit of a sell-off. Again, could be algorithm driven. But Facebook in general, great cash flow, great management, still growing with Instagram and social media is the future. It is still way ahead of the game, way ahead of Snapchat, making more money in regards to advertising, and it's not even close. Amazon, again, the retail issues with retail closing, Amazon is definitely taking over. Now in Europe, they're starting to talk about selling cars online. That could be the future. Would it be able to pick up here in the States? Not really sure, but a buy in Amazon is a trust in Jeff Bezos. And again, if you want to look at a chart 10 years in Amazon, you could see the man has done his work. He has done his job. Amazon is an amazing company. This isn't pets.com of 1999. This isn't Netscape. This is a legitimate company with legitimate earnings. PE is still great. I love them as a company in general. I love them as a stock. Love to buy calls as well. On Alphabet, Google, again, advertising is key. They're still the king. Stick to the guys that are still the top guys. Even with this drop off, I still like them. Again, set stop losses just to make sure to cover yourself. And Apple, again, with the new cycle of iMacs, iPads, and MacBooks, I think Apple will bring to the forefront the hardware side and just being more than just a phone company, which people are speaking of. So those are my opinion on those four companies. Anthony, you there? I think we lost Anthony. Okay, just stand by. Okay, let's go ahead and take a look at what other stocks have traded today. Under Armour jumped up a little bit, 5.8%. We talked Netflix today, about 4.2. Netflix is still a decent company. That would be my last pick. Hey, Anthony, you're back.
Okay, hold on.
Okay, so we have a little technical difficulties to all our viewers. My apologies. Definitely going to get him a better mic.
Okay, that should be good.
Yeah, you're okay. I think everyone will survive. If anything, I'll just repeat what you say to make sure. So we talked a little bit, Anthony, about FANG. I talked about how I liked Amazon the most, and I talked about how I liked Facebook second, and Google third, and then Apple will be fourth in general. And we kind of went over the fundamentals around it. Netflix would be my fifth pick or my last pick. I don't dislike them, but I don't like them as much as the other stocks. The only reason I would say is that I like they make their own content, but it's very, very pricey in general.
Yeah, definitely.
To me, it hits a little bit on the margins. I want to see a little more bottom line growth. Top line growth, the revenue is going to come. Reed Hastings is doing a great job, but honestly, I like to position Netflix as a takeover candidate. To be honest with you, I think definitely an entertainment company who would like to consolidate, maybe a Disney would like to get in and buy them. I would like to buy them a small position, maybe a couple of calls down the line. Maybe kind of a lotto ticket here and there. But I think they're the most prime for a takeover, but yet they're the one that is the lagger of the FANG companies.
Exactly. Yeah. Huge drop by them. I mean,
Yeah.
today alone, 4% today.
They fell about
Yeah.
4% today. Yes, 4.2.
I'm actually surprised on that note. I'm actually surprised that Apple didn't make a larger recovery at the end of the day.
Well, we had the downgrade on Apple today. A little bit of a downgrade from the analysts. One of the analysts, I forget the name, was a price target drop, I believe, to 130, 140. Again, these kind of price calls or price targets, do they move the stock? Yes, but we had a price target. Actually, let me go and read you the headline. McGuire raises a price target 170 from 160, rating outperform on Apple. And then we had a downgrade this morning. You see here, I had the downgrade written down. Bear with me, guys. There was an upgrade and then there was a downgrade, which is pretty funny.
Exactly. Yeah, that's what. Yeah.
And then we had an upgrade on Amazon today, which we spoke about earlier. So again, take it with a grain of salt. Again, upgrades don't exactly mean gospel, but it means it's a consensus view of that. Excuse me, of the firm in question. They have a couple of analysts that are on top of that stock individually, and they know what they're doing. They know what they're talking about. Now, I wouldn't say do your own research, but I mean, if you have enough analysts that are bringing up price targets, then that's something to look for.
Yeah, definitely.
Looking here at the gainers here on the Dow, General Electric with Jeff Immelt leaving the company. We talked about in the morning how the stock price hasn't even moved. It's unchanged in 13 years. A change had to happen. They sold GE Capital way too early on the financial crisis, and it hurt them. But I mean, General Electric is just a conglomerate. I mean, you're not going to get growth anyways. You're basically playing it for the dividend. Am I right?
Pretty much. That's it.
Yeah, basically, we don't trade General Electric at all. Not for any particular reason that we don't like it. It's just the fact we're not going to get enough growth to justify. Apple and McDonald's took a hit today. McDonald's with they're going to add, I think, about 25,000 workers using Snapchat today. I read on Reuters. Pretty interesting stuff. That's something that McDonald's is kind of in the forefront now. They're trying to come up as being a little more tech friendly to the millennials. They don't want to be your mom and dad's McDonald's. They want to be a little more technology friendly, especially with the kiosks where you can place your order through touchscreen, which saves them on labor costs. So again, it could be Wall Street just saying, the labor cost is coming. in McDonald's may hurt margins, but the CEO now is doing a great job. I love the sales, same store sales. Franchisees are happy. The all day breakfast has been a home run. I like McDonald's.
Oh yeah, definitely. I mean, we've had a nice run from 134 to 154,
150.
but yeah, if you could pull the chart up,
Yeah, let's
actually,
pull it up.
for the technical traders, it's actually pulling up to the 50 moving average
Oh, okay,
on 4 hours. So you know, that's
absolutely.
nice. Um, and yeah, buy on the pullbacks. That's all I can say. I mean,
I mean, and it's a great company. It's a blue chip company. Plays a solid dividend. I mean, I do like it where we're at 148.46. I do see we're going to get back to 152. Again, we just have to bounce off here off this trend line that we see right over here. Now, if we can get a bounce right off here off of 148, get back to 152. I mean, that wouldn't be too bad of a move. 1 to 2%. We had a drop today. Could get some dip buyers. Again, we just need a little bit of reassurance now in the markets. Again, stocks get hot, markets get hot. It has to cool down. Even the Trump rally, the reflation trade, yields, yields in banks, right? The interest rate trade, the reflation trade, dollar yen, even that cooled down after the Trump election. I mean, this has to be expected, guys. This isn't going to just shoot up to the moon forever. It doesn't work that way. But this is why you hedge. This is why you hedge. It's so important to hedge and have stop losses, guys, because this is the market. Nothing's guaranteed. Last thing I want to go over with you, Anthony, if we got a minute or so, let's go over oil really
oh
quickly.
yeah, sure.
All right, so we went over oil today. Oil's up a little bit, 46 handle. Right now, we're looking at an hourly chart. We had a bit of a rise since Sunday. We hit a high of 46.60. We were knocking the door 47, and then you just pulled back. Again, demand and supply concerns, fracking. I mean, pick what it is. You know, with OPEC, I mean, the cuts are not enough. I mean, I hate this. I'm gonna have to say it here if no one else is saying it. Tesla is a problem for oil. The Teslas
Yeah,
of the world. That's a problem.
you think about it, yeah.
Yeah, that's what's hurt in this oil. And when it comes to OPEC and OPEC producing nations, the only way they can pay their bills or what have you is they have to pump more oil. So it's going to be very difficult to kind of fund budgets and keep budgets intact in Saudi Arabia and Russia and what have you if they don't pump oil. It's hard for them to pull back production when it hurts them to not make any oil. It's like not working, basically. Like imagine you taking a week off and saying, "Well, you know, I need to take a week off and not get paid for it because, well,
Yeah.
my neighbor can't see me make too much money." You know, it doesn't make it makes sense in the sense temporarily, but I don't think it's sustainable. I think a lot of these OPEC companies are going to pump oil. We just need a little more demand in order for it to be propped. I do believe that we're a little bit of a floor here. 45 is kind of the support in my eyes. I would like to see it go back to 50. Do I see it happening? Not anytime soon. I would like to see the knock on the door of 48. If we break 48, we're off to the races. Then I would say 50 is
Exactly.
in, but 48 would be my target.
Exactly. I mean, we're here. This is support. Even if you go back to the hourly, check it out again. All we need is a small push up of about a buck,
Right.
and we'll probably much go to 47.50. So
Right. You
short
see,
term, definitely going up. I mean, the pullback is coming here. Fundamentally, that is where. I mean, we've been doing this all year with oil. It's
oh
been
yeah,
range
absolutely.
bound.
We've been playing it, and it's been very
So,
productive for us, very lucrative. And then we could see here on this
before,
candle, this candle here was from the inventories report, and you just saw how that big drop came. I do see a little bit of a retracement coming around to 48. Again, we just
yes,
need a solid inventory report. If we get a solid inventory report, or we get a good, a nice draw on a Cushing draw, I mean, we 48 is definitely in question, is in play.
oh yeah, definitely. On this hourly, you see the little bit of breakout above 48, and just right now coming down to retest it. So I'll move back above there. I mean, above 46. That's a beautiful long
Right.
on the short term side.
Absolutely. So, okay, those are a couple of things we're looking at. We're still looking at the FANG stocks. We're looking at other stocks that are going to give us some value. But right now, we just wanted to talk headlines and how the markets are moving. And right now, it's been tech. We talked a little bit of oil. We talked a little McDonald's. I mean, we talked a little General Electric. Again, big day on Wednesday. We have the Federal Reserve rate hike. I'm going to slide something in real quick. Banks. You want to go ahead and take a look
Oh,
at
watch.
an XLF?
Yeah, check out XLF. I was actually going to say that.
Okay, XLF. Okay, so we see here on
Pull up
the
the daily.
hourly, we broke out on the 24 handle.
Pull up the daily on the longer time
All
frame.
right, let's
See
go
what we
and put
got.
up the daily on XLF. Okay.
Yeah, I mean, it was a head and shoulders top,
Yep.
kind of got above that with a Fed rate hike. We could get some more upside at 25. We broke out above that 24 level, which was crucial. We are above that. We got to see where it goes from here, but it looks up.
Absolutely. Yeah. Again, could it be priced in? Financials be priced in with the rate hike. Again, we're looking at 25 basis points. I'm gonna be a little optimistic. I think that with a good job number we've been having, solid growth in jobs, GDP's been pretty tame, but inflation numbers have been great, have been exactly where you need to be. CPI, PPI. I wouldn't be surprised if we get a 50 basis hike, just to show the markets
Ooh,
that hey, listen, recovery's here. I
yeah,
mean, we just
could
had
happen.
we had the JOLTS report, the JOLTS job report last week, and it was one of the best JOLTS reports we've had. NFP came a little light, but I mean, what more growth do we need to get that rating hike? I know we've been told two more rate hikes, so three for the year. We're at one already. Could we get a 50 basis point hike? What would you be your percentage call on that? Would you be confident or not confident?
I'd say not confident in the 50 basis point. I'd say not confident. Could definitely happen, but I think the chances are pretty low.
I
That's
think
on my end.
Janet Yellen comes off a little too dovish for your taste.
Yeah, exactly. I mean, dovish rate hike is coming. I mean, you see the
Yeah,
headlines
I mean, we're,
everywhere.
we're going to get a
Going up
25
to
basis point hike. I think that's pretty much set in
yeah, I believe
stone.
so.
The question is it priced in? I do like the banks. I think that with a higher yield environment, we got to look at the 10-year and make sure that it's on point. If we can break 2.4 on the 10-year, let's go and take a look at that on a 10-year yield. Oh, this is a 10-year. Let me see. US 10-year. There you go. Here's a government bond 10-year. Right now we're at 2214. We were at our peak in March of 262. I mean, if we can break back to 2.4, I'm definitely a little more confident in the banks. But what's telling for banks to me is the Dodd-Frank legislation. If we can get that passed with the House, this would take away the restrictions of investment banking and the fiduciary rule. Again, just talking to Wall Street, politics aside, this whatever makes us money, right, guys? I do like with a Dodd Frank repeal. I love Citigroup. I love Morgan Stanley. I like Goldman. I definitely like Bank of America with Morgan with where they have Merrill Lynch. I think those four are the ones I like. And if we can get a reflation back to 2.4, I'm even more solidified that banks are going to be the big winner here, and it will definitely have the summer swoon for banks. I mean, you're talking about Citibank's going to break 65, and I would definitely believe that Bank of America break 26.
Yeah, something definitely to keep an eye on,
Yeah.
especially with the tech sell-off and the Fed meeting on Wednesday. Something definitely to keep your eyes peeled for. Watch
Yeah,
banks.
yeah, 26 right here for me would be the line for Bank of America. Citigroup, we're at 64, 32. We can get to 66. Beautiful. But again, Citigroup would be more of your international bank, a lot more Europe
Yeah.
exposure, Asia exposure. Bank of America is more domestic. So it depends on how you want to play it. Citigroup has had a better year because of that European exposure and a bounce back in the DAX and the FTSE. I mean, we've all seen it, how even the French CAC has been bouncing. So definitely
Oh yeah.
Citigroup, even the Japanese, the Nikkei is up, what, 20,000? Up to 20,000 now, past it. Even with negative interest rates from the BOJ. And Citigroup has been a beneficiary of that.
And the bank option plays are cheap. They're super cheap.
They are
They can
very
take a
cheap, and that's one
discount.
thing I do like about the options here. XLFs and the cities and the BACs is that they are cheap. They're a good proxy to the tech where you have to pay so much money for an Amazon for a premium, or a Tesla for a premium, or a Google for a premium. Banks, again, very liquid, high volume stocks. Bank of America every day is usually the highest traded volume, most volume traded stock on the NYSE. And it's no secret that there's tons of stock. You're going to get in and out of your position, and your liquidity is going to be great because your spread is going to be very thin from your bid and your ask. So again, don't buy just based on that. But I'm saying it's something to comfort you with.
Exactly.
Yeah. So again, with that being said, man, we have a heck of a week ahead of us. So We're gonna keep watching. Yeah, we're gonna keep watching. In July, we have a Citigroup. Let's look here. Earnings is on the 14th of July. So again, great video. I love everybody for joining us. Thank you so much. This was just a video regarding some stocks. Any kind of specific trades, we're always going to talk about in the chat room. If you are interested in our trading, fund managing, or just signals, this is our website here, garcapitalfx.com, or email us at garcapital@gmail.com. So again, Anthony, again, thanks for your time, man. We had a heck of a day.
No problem at all. Glad to be here. Glad to be here. Make sure everybody follow me on Twitter at Liam Capital One, Instagram Liam Capital.
Liam Capital One on Instagram, definitely. Definitely, Anthony's gonna get a better mic next time. I promise.
Definitely, guys.
Definitely. All right, guys. We'll go ahead and see you guys later. We'll see you tomorrow for the markets. And all right, man, let's go ahead and kill it.
Let's do it. Take care, everybody.
Take care, everybody.